Hi there, and welcome to benlaws.uk. I'm Ben Laws. Today I'm going to talk just a little bit about taking a break from trading. I think it's very important to take regular breaks away from trading. A lot of people, when I talk to them about this, they're like, well, the markets are always open, there's always trades available, I'm going to miss trades, I'm not going to grow my account by another 5%, 20%, whatever. If I take a break, I'm going to miss the next big trade. I'm going to all these different sort of reasons, excuses, or justifications arise for them to kind of not take a break and stay in the market. Um, the way I work is I ensure I take regular breaks away. And by regular breaks, I mean I will probably trade for 3 weeks and then take a week off. Sometimes I'll trade for a month and then take a month off. It really depends on kind of what's happening in my sort of personal life, whether I've got any holiday booked, whether it's really busy at work. I have a day job as well. It depends on a number of factors. Generally, it's one or two of those options. So 3 weeks on and 1 week off, or the 1 month on and the 1 month off. And I won't deviate from that. Why? Well, the markets are open here in the UK, certainly from around 10 or 11 o'clock at night on a Sunday to Friday, say 10:30 at night. During that time, there are lots and lots and lots of potential trade setups. I'm a short-term trader, as are a lot of people. A lot of people are intraday traders trading intraday sort of charts, and so by doing that, we're kind of prone to looking at the charts much more than, say, sort of long-term position traders who trade the weekly or the monthly charts. So during that time, there's lots of potential trade setups, and they may or may not occur. I mean, how many of us have kind of looked at a 5-minute chart and gone, oh, look, there's a setup there. I've got this pivot that's been missed, and I'm waiting for this to happen, and I'm waiting for that to happen, and then you just get a long period of sideways trading, and it doesn't work out, and we've wasted all that time kind of looking. There are active trades that we will have that are ongoing at that moment in time or throughout that week. They'll either be kind of profitable trades or be loss-making trades when you kind of need to monitor. What I'm saying is there are decisions to be made between that Sunday opening and that Friday close. There are lots and lots of decisions to be made, whether it's monitoring potential trade setups, whether it's managing actual trades, whether it's looking at exit strategies, whether it's considering sort of loss, how much of a loss we're prepared to take on this particular trade. Should I move my profit, take more, take less? Should I adjust my trade? Should I be looking at this currency? I'm trading the euro dollar, and it's moving in this direction. Should I then try and capitalize that on the euro pound? Should I hedge one currency against another? Depending on how you trade, there's going to be lots of decisions running through your mind. There's also economic events. The news is coming out on this. Will this have an impact on my trade? Will this have an impact on the trend? Will it have an impact on the counter trend? Or will it just do nothing? Well, I'll hang around and watch, or I'll tap in before, I'll tap in afterwards. And also sentiment. For those people that do kind of sort of monitor sort of Twitter feeds and market commentary, there's just constant sort of stream of information. And you can get caught up in all of that, and you certainly will at some point get caught up in some of that throughout the week. And the problem with this type of trading is while all this is going on from Sunday to Friday, it can divert your attention from other work obligations, from shopping, housework, to time spent with loved ones, partners, family, friendships. It can make you quite unsociable if you're not careful. So why would you want to sort of do that all the time anyway? It can also lead to poor decision making. Now, when the market is active, well, short-term trading, you are susceptible to making a lot of decisions. You have to make a number of decisions. I mean, you don't have to make hundreds of thousands. I'm not saying that every tick creates a potential decision. But if you're looking at a number of currency pairs, even if you're just looking at one and waiting for one to do something or to change or to prompt either an entry or an exit, or you're managing a trade just on one currency pair, the time spent on that can overextend what you believed you were going to spend at the outset. And the more and more you kind of keep trading, the more decisions you have to make, and the more you analyze those decisions, and that can lead to, as I say, poor decision making and over analysis. And by doing that, it also puts your capital at risk. It puts either the amount of profit you're taking on a trade if you shorten it because you're thinking this, thinking that, reading this, reading that, hearing this, hearing that. It can put your potential profit at risk. It can extend your losses if you think, well, I'll move my stop loss a little bit back because of this, because of that, because of this event's coming out, or whatever. All of this information eventually will lead to a poor decision being made. It could lead to a loss, it could lead to a reduction in capital, or it could lead to a reduction in profit. So I say take a break. If you look at traditional employment, which a lot of us will have all come from at some stage, you don't work 7 days a week, 52 days a year. I'll start again. You don't work 7 days a week, 52 weeks a year for 45 years in a row. No, we have bank holiday breaks, we have weekend breaks, we have 1 or 2 days off a week, we have holiday periods, we have holiday allowances, we have all of these mechanisms in place, and they're in place because if we continue to do the same job in employment that we did day in and day out, make the same decisions, or we'll just make decisions all the time, we are going to not be valuable employees for the company that we work for, because we will become tired, we will become over analytical, we will end up making mistakes. So we have these holiday periods. So even though the market is constantly active, I say take those breaks. You deserve it. If you've been trading profitably, or even if you've not been trading profitably, you still deserve a break. If you've been trading profitably, one of the things that I do as a reward, if I trade for 3 weeks on and 1 week off, I'll add up the profits that I've made in the last 3 weeks, I'll divide that by 3 and essentially take a third of that profit, spend my week having a trading holiday. That'll either be a physical holiday where I sort of either sit around the house and take some time off work, or go somewhere, or just kind of continue to do my day job but not have the additional kind of burden of trading. It gives me some time to spend that money, pay off a debt, buy something nice, treat someone, do something that you wouldn't do, make sure you reward yourself. So that's the deserving bit. B, it unclutters your head. If you're kind of following sort of currencies or stocks or equities or anything, you've got, even if you don't pretend that you sort of, you're not paying too much attention, you have still got all these different sort of levels of support and resistance in your head, and it fills up space, and it's completely not needed to trade successfully. You don't need to know, oh, well, this is the monthly high, and that's the yearly low, and this is the weekly pivot, and that's the daily pivot, and that was yesterday's high. You don't need any of that in your head at all. So by taking time off, it allows all of that to go away, just gone. Ensures you get some rest. Again, if you're trading as well as doing a day job, as well as managing a personal life and managing personal finances and all this kind of stuff, it gives you some respite from the burden of trading. It's like having a day off work, and it'll also make you more capable. You'll come back feeling refreshed, able to make decisions again, able to sort of analyse maybe what you did right over the last few weeks, or even what you did wrong over the last few weeks. You'll come back sort of re-energised and more capable of kind of continuing. And of course, a break protects your capital. Your money's not going to disappear. If you take some time off from the market, if you've got no open trades, you've closed out, and you're taking a week off, or you're taking a 2 week off, or you're taking a month off, that money's still going to be there and still have the same value as it did, more or less, as it did when you left off. And that in itself helps you stay in the market for longer. The market never goes away, and that's why so many people lose money, because they're always trying to beat the market, and you can't fight every day. A boxer has to take off sort of times for recovery and retraining and rest. Athletes do. Your average worker takes time off, from their job and their obligations. Um, we personally, as individuals, go away on holiday, fly off to some sunny country, get away from the kind of run of the mill, got to go to work, got to pay the bills, got to get insurance for this, got to make sure this is okay, fix the car, sort the children out, la 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 la, this goes on. So the market never goes away. You should make sure that you do so regularly.